In 2026, long-term investing is no longer just about patience, it's about strategy, adaptability, and understanding the bigger picture. Markets are evolving faster than ever, driven by technological disruption, shifting economic policies, and global uncertainty. Yet despite all this noise, the most successful long-term investors are not reacting emotionally. Instead, they are following a clear, disciplined strategy that allows them to stay ahead while others fall behind. At the core of this strategy is a shift in mindset. Long-term investors today are no longer chasing quick gains or trying to time the market perfectly. They understand that short-term volatility is inevitable, but it's also temporary. Rather than fearing market fluctuations, they see them as opportunities, moments to buy quality assets at discounted prices. This mindset alone separates consistent winners from the majority of investors who panic during downturns. Another key component of their approach is diversification, but not in the traditional sense. In 2026, diversification goes beyond simply spreading money across stocks and bonds. Investors are now looking at different sectors, geographies, and even asset classes such as commodities, real estate, and emerging technologies. The goal is to build a portfolio that can perform under multiple economic conditions, not just during periods of growth. Technology is also playing a major role in shaping long-term strategies. Investors are increasingly using data-driven insights, AI tools, and advanced analytics to make informed decisions. However, the smartest investors are not blindly following algorithms. They combine technology with human judgment, ensuring that their decisions are both informed and grounded in real-world understanding. This hybrid approach gives them an edge in identifying trends early without becoming overly reliant on automation. One of the most important trends among long-term investors in 2026 is their focus on quality over hype. Instead of jumping into trending stocks or speculative assets, they are carefully selecting companies with strong fundamentals, businesses that have proven resilience, consistent earnings, and a clear vision for the future. These investors are asking deeper questions. Does this company solve a real problem? Is it financially stable? Can it adapt to future challenges? This level of analysis helps them avoid costly mistakes. In addition to focusing on quality, long-term investors are paying close attention to macroeconomic factors. Interest rates, inflation, and global economic trends are no longer background noise. They are central to investment decisions. By understanding how these factors influence different asset classes, investors can position themselves more effectively and avoid being caught off guard by sudden shifts in the market. Risk management is another pillar of their strategy. Contrary to popular belief, long-term investing does not mean ignoring risk. In fact, it requires actively managing it. Investors are setting clear boundaries, maintaining proper asset allocation, and regularly reviewing their portfolios. They are not afraid to make adjustments when necessary, but they do so with a long-term perspective rather than reacting to short-term market movements. A major advantage long-term investors have is the power of compounding. In 2026, this concept remains as powerful as ever. By staying invested and reinvesting returns, even modest gains can grow significantly over time. The key is consistency, continuing to invest regularly, regardless of market conditions. This disciplined approach allows investors to benefit from both market growth and time itself. Another important aspect of their strategy is emotional control. Markets can be unpredictable, and fear and greed often lead to poor decisions. Successful investors recognize this and develop systems to stay disciplined. Whether it's sticking to a predefined plan, avoiding constant market checking, or focusing on long-term goals, they prioritize rational thinking over emotional reactions. Interestingly, long-term investors are also becoming more forward-looking in terms of global trends. They are identifying industries that are likely to shape the future, such as renewable energy, artificial intelligence, healthcare innovation, and digital infrastructure. By investing in these areas early, they position themselves to benefit from long-term growth rather than short-term speculation. Moreover, they understand the importance of patience in a world that rewards speed. While many market participants are looking for instant results, long-term investors are willing to wait. They know that real wealth is built over years, not days or weeks. This patience allows them to stay focused and avoid being distracted by temporary market noise. Regular portfolio review is also a key habit. However, this doesn't mean constant buying and selling. Instead, investors periodically assess whether their investments still align with their long-term goals. If something fundamentally changes, they adjust, but they avoid unnecessary trades that can erode returns through fees and poor timing. Another emerging strategy is the balance between growth and stability. Long-term investors are not putting all their money into high-risk, high-reward assets. Instead, they are combining growth-oriented investments with more stable, income-generating assets. This balanced approach helps them achieve steady progress while still capturing opportunities for higher returns. In 2026, long-term investors are also paying attention to global diversification. Rather than focusing solely on one country or market, they are spreading their investments across different regions. This helps reduce risk and provides exposure to growth opportunities in emerging markets, which often outperform during certain economic cycles. Ultimately, the strategy long-term investors are using to stay ahead in 2026 is not about predicting the future. It's about preparing for it. By staying disciplined, focusing on quality, managing risk, and maintaining a long-term perspective, they are able to navigate uncertainty with confidence. As markets continue to evolve, one thing remains clear. Success in investing is less about reacting to every change and more about sticking to a well-thought-out plan. Those who understand this and apply it consistently are the ones who will continue to stay ahead, no matter what the future holds.